Good afternoon, everyone. Welcome. Thank you for attending. On behalf of the National Transit Institute, I welcome you and thank you for participating. Today's webinar is based on NTD annual reporting for Indian tribes. We are pleased to have as our presenters today, Courtney Springer and Eric Chadwell. Courtney Springer joined the NTD team in 2015. He is a graduate of the University of Virginia and currently serves as a senior validation analyst for the Rural Reporting Module of the National Transit Database. Eric Chadwell joined the NTD team in 2016. He is a graduate of the James Madison University and currently serves as a validation analyst for the Rural Reporting Module of the National Transit Database. Today's webinar will consist of the presentation with the ability to ask questions during the presentation in the Q&A box. If you don't see the Q&A box, you should look at the little control panel of options, and there should be a little folder-looking thing that says Q&A that toggles it on and off. You can type your questions in there at any point during the presentation, and if we don't have a chance to answer it during the presentation, I will moderate the questions out loud at the end. If you don't have a copy of the presentation handouts, I pasted that in the chat box so you can follow that link. I guess that covers housekeeping items, and I will now turn the presentation over to Courtney and Eric.
Good afternoon, everyone, and welcome to the National Transit Database webinar for tribal reporting. My name is Eric Chadwell, and thank you for joining us today. We're going to cover a lot of material related to completing the annual report and using the online reporting system. So if you have any questions during, please feel free to ask them through the chat pod. We'll attempt to answer them as they come in and continue to answer any questions after the presentation is over. Here's the contact information for the National Transit Database. If at any point you need any general or technical assistance while completing your report, please feel free to reach out to the help desk between 8 a.m. and 7 p.m. Eastern Time if your analyst is unavailable. Again, my name is Eric Chadwell, and I'm an NTD validation analyst here, and there's my contact information, along with our other presenter, Courtney Springer, and her contact information. We're going to cover several topics during the webinar today. We'll start with an overview of NTD as a whole, go through the 2019 changes and clarifications for this report year. We will review NTD fundamentals, system interface, and account management, and we'll provide an overview of the report kickoff and the forms, along with common challenges and the submission and closeout processes. First, we're going to discuss an overview of the NTD. The National Transit Database was established by Congress in 1974 as a means to collect information and statistics on transportation agencies. This data is used in FTA's biennial reports on the nationwide capital investment needs for public transportation. And the NTD data is also compiled and published annually for the general public to view and utilize. Entities that benefit from FTA's 5311 program, including states, tribes, and territories, must report to the NTD. And this also includes subrecipients of direct grantees. Additionally, previous recipients of 5311 who have not reached the end of the required reporting period must report. For example, if an agency purchases capital with 5311 funds, that agency must continue reporting to the NTD throughout the useful life of the capital purchase, regardless of whether they continue to operate transit service. Agencies who do not receive 5311 funds may voluntarily report their data for potential inclusion for future funding. Chapter 53 of Title 49 states that the Secretary shall award a grant under Section 5311 only if the applicant and any person that will receive benefits directly from a grant are subject to the reporting and uniform systems. And this is essentially stating that by receiving 5311 funding, that you're required to report to the NTD. The NTD data you all submit will go into an apportionment formula which will then be distributed among tribes. The NTD data is used in determining these amounts along with being used for performance benchmarking, academic research, conditions and performance reports, and for the Government Performance Results Act. You can see here all the reporting deadlines for the NTD reporters. If your fiscal year ends between January 1st and June 30th, your report will be due on October 31st. If your fiscal year ends between July 1st and September 30th, your report will be due by January 31st. And if it ends between October 1st and December 31st, your report will be due by April 30th. Next, we are going to discuss the changes coming up for this report year. One clarification for this year is the eligibility for evacuation or disaster service. So any transportation services provided in direct response to a natural disaster or as part of an evacuation effort is not considered public transportation. Therefore, the financial and service data should not be included in the report. If you have any instance where you have questions whether or not to report, please discuss this with your analyst. A new change for 2019 is the inclusion of TNCs or transportation network companies. If your agency is reporting to the NTD and is contracting with a TNC or on-demand service, if that service is considered public transit, you must include the data for this service in your NTD report. As mentioned on the slide, the contract between your agency and the TNC must meet the criteria for the purchase transportation as defined in the NTD policy manual. The D10 form was recently updated to allow a selection of APCs for the collection of UPT. If your agency used automatic passenger counters to collect the ridership, you will need to indicate this on the D10 form. As you can see here, the form layout is the same, but there is a new selection for APC data and a checkbox to indicate if they were used. If you do not have APCs, you will fill this out as you did last year. Next, we will go through a few A15 clarifications. First, passenger stations no longer need to be enclosed buildings to be reported, but rather it can be a significant structure. Descriptions of the facility types have been updated in the policy manual to provide further clarity if you have any questions about these. Following up on the last clarification, for report year 2019, this report year, you may report a condition assessment date past the fiscal year end date of your agency, but before the due date of your report. For example, if your fiscal year end date is June 30th and your due date is October 31st, you may report a condition assessment in between those dates, for example, October 5th. This change in report year 20 next report year will be required to have a condition assessment date within your fiscal year. Next on the A15 clarification list, transit agencies are required to inventory all passenger facilities used in revenue service, whether or not the agency has capital responsibility for them. And these will include passenger stations and passenger parking facilities. The facility type ferryboat terminal is now an option on the A15 form. If you have any of these and it was reported as something else last year, please make sure to update it to the correct type. So to continue with the A15 updates, we're going to clarify that incidentally used admin or maintenance facilities do not need to be inventoried on the A15 form. It was clarified that incidental use is when 50% or less of the facility's physical space is dedicated to the provision of public transportation. So if you have a maintenance facility, you can use a total or the number of transit vehicles serviced in a facility compared to the total number of vehicles to get this percentage and further determine if it's incidental use or not. And the last A15 update is again regarding the condition assessment. A condition assessment is not required for a facility that is until the construction is complete on the facility. So if the agency is still using the facility during construction, please inventory this, but if it's not being used in revenue service, please leave it off the A15. Next is a change to the A30, which is the addition of a checkbox for if a vehicle is autonomous. This is defined as a vehicle capable of performing all driving functions without human input under certain conditions. This will typically be with rail modes, but please discuss with your analysts if you believe this is applicable to your vehicle. Also, here is a fleet details page to quickly show you where the checkbox will appear on the A30 form. And reminders, optional field, so you don't need to put anything there. So if you have any of the vehicles, like I said, please check off the box and discuss with your analyst. For the A35 form for service vehicles, those not used in revenue service, the clarification is if you use service vehicles that are pulled from a pool of vehicles such as public works, you should report a representative sample fleet of vehicles that usually support your revenue service. This will work like the requirement to report non-dedicated revenue vehicles on the A30. Another service vehicle clarification is the intent of the estimated cost field on the A35. This is to capture the cost of a comparable fleet. It should reflect the current asset type and allow for moderate increases in cost due to inflation or improvements in technology. The last clarification for this year is in regards to the service vehicle description. The description breaks down to the vehicle must be self-propelled, neither roadworthy or a major piece of construction equipment. So no forklifts, no golf carts, or any vehicles like that. If you have any questions, feel free to reach out to your analyst. If your agency is a sponsor of a TAM plan, the narrative report is required this year. This is a document that outlines performance targets reported on the A90 and the progress towards those targets, and can include any description or changes in the transit system. Now we're going to jump into a review of the NTD fundamentals, where we're going to cover modes, types of service, revenue service definitions, and an overview of the financial information. The two most common modes in the rural module include motor bus and demand response. So motor bus service is powered by motor and fuel contained within a vehicle, and the service includes those that have routes, route deviations, point deviations, or are a deviated fixed route. And demand response service is defined as service scheduled in response to calls from passengers, much like a dollar ride system. Another popular mode in the rural module is the commuter bus mode. We receive many questions on what is considered commuter bus service versus normal bus service. To clarify, commuter bus operates with more than 5 miles of closed-door service, and the same type of vehicles are consistently operated on the service. If you think you have both bus and commuter bus service, please keep in mind that the vehicles shouldn't be used between the services on the same day, and that would include the driver's work assignments. If you're currently reporting both commuter bus and bus service and should only report one mode, please let your analyst know. The next thing we have is the type of service. Currently in the NTD, there are two types of service, the directly operated and purchased transportation. Directly operated is when the service is operated by the agency and uses the agency's employees. And purchased transportation is when the vehicles are operated by the seller's employees, the service is branded as a buyer's, and the buyer is paying the full cost of that service. Here's some of the data you report, as well as the as well as the abbreviations that are used throughout this presentation as well as on the report. These data points are collected on a per mode and type of service basis, except for sponsored unlinked passenger trips, which are collected by the demand response mode types. The first data points I would like to discuss are the vehicle revenue miles and the vehicle revenue hours. So we're going to talk a lot about revenue service and what really revenue service means. So revenue service is when the vehicles are transporting passengers or are able to transport passengers, and should include any layover or recovery time. And revenue service does not include any deadhead, driver training, school bus or charter services, vehicle maintenance testing, so driving to and from the vehicle maintenance, fueling the vehicle, or when the driver's on lunch break. So we mentioned in the previous slide deadhead. So deadhead is not reported in your revenue service, and this includes leaving or returning to the garage or yard facility, changing routes, or when there is no expectation of carrying passengers. There are detailed tables found within the policy manual, which further clarifies what is revenue service for each mode. So you can see here what is and what is not considered a revenue service for demand response. So please note that when the vehicle is dispatched from the garage to pick up a passenger, it's not revenue service. And after they drop off the last passenger back to the dispatching point, is also not considered revenue service. Following up from the previous slide, this is a rundown on what is and what is not considered revenue service for the bus mode. Again, from the garage to the first stop of the route is not considered revenue service and should not be included into the report. And from the last drop-off point back to the garage should not be included either. When reporting unlinked passenger trips, please include all passengers. And these passengers are usually classified as regular or sponsored. Passengers are counted each time they board the vehicle, no matter how many vehicles they use from their origin to their destination. Sponsored trips, which are a part of the unlinked passenger trip number being reported, are trips that are paid for in part or in full by a third party. These may be part of a coordinated human services transportation plan. And common sponsors are the VA, Medicare, and assisted living centers. Again, when reporting the unlinked passenger trips, please make sure the sponsored trips are part of that number for the demand response mode. Vehicles operated in annual maximum service, or VOMS, are the number of revenue vehicles an agency operates to meet the annual maximum service requirement. VOMS are counted during the peak season of the year on the busiest day, but you will want to exclude atypical days in this. This shouldn't be the amount of active vehicles your agency has in service, but rather how many vehicles are used simultaneously during peak service. The NTD follows accrual accounting principles. So what that means is that revenues are recorded when they're earned, regardless of whether or not the receipt of the revenue takes place in the same reporting period. So if a passenger purchases $10 worth of fare, but only uses $5 at that moment, the agency would report $5, which is how much they use at the time. And expenses are recorded when the liability occurs, regardless of when the payment is made. And we'll be going over this later more later in the presentation. Again, when reporting your data to the NTD, you will report the funding that you spent, not those that you were awarded. Seen here is an example reporting the funding that you spent. So this example, you would report the $178,000 instead of the $275,000 that were awarded. So jumping into the funding expense types, operating expenses are the day-to-day expenses that a transit agency incurs. These may be for operating and maintaining vehicles, maintaining other equipment, any planning costs, admin costs, as well as the other examples that are listed here. And capital costs are those related to the purchase of equipment. Equipment means an article of non-expendable personal property having a useful life of more than 1 year. The equipment will have an acquisition cost which equals the lesser of the capitalization level established by the government unit for financial statement purposes, or $5,000. And an example of a piece of equipment could be a vehicle that you purchased during the year. The reporting of capital expenses, the reporting of capital assistance spent on operations will happen when the capital funding is spent on activities that are normally considered operating, such as preventative maintenance or the purchase of tires. So please make sure to break this out of your other operating sections, as this has a different match requirement. If your agency has more than 2 modes, the operating costs will be broken out between the modes based on the direct and shared expenses. Once those are broken out, the shared expenses may be calculated between the modes based on the cost allocation method. Here's a quick overview of the TAM phase-in schedule. Everything you see that is required will be due on your annual due date, which includes the condition data for 1/2 of your facilities and your narrative report. So we will mention capital responsibility multiple times throughout this presentation with regards to the asset module. Please see the list here to determine whether or not your agency has direct capital responsibility for an asset. As a note for the 3rd bullet point, an infrastructure asset itemized as a capital line item in the budget does not necessarily mean an agency has direct capital responsibility. An agency must also have management or oversight responsibilities for the line item project. In addition, performing minimal preventative maintenance work does not necessarily indicate direct capital responsibility. Please see here for the links to the key reference documents. Included are the glossary and the annual reporting user guide, as well as the USOA that was updated last year. Also, here are some additional links to the policy manual, which you will want to select the reduced reporting manual when you go to the page, and the TAM facility performance measure reporting guidebook. We'll get into some more definition review when we go through the forms, but now we're going to get into the NTD interface and user management review. To access our website, please go to transit.dot.gov/NTD. When you get here, you will find links to our manuals previously mentioned on the left-hand side and a link to the reporting system on the right-hand side of the screen. When you log in, the newsfeed is going to be the first page that you see. Included in that, you'll see status updates and report updates from NTD personnel posted here. The tasks are assigned to CEOs, CO delegates, and NTD contacts. These usually are related to completing the report year kickoff at the beginning of the year, or if certain pages are left unsaved or incomplete. Agency reporting forms and profile information are accessed through the Records tab rather than the Reports tab. So the Records tab is the most commonly used tab in the NTD system as it directs users to the report packages as well as your agency profile. We'll go through the package in a moment, but the profile is where you will edit your modes, edit your agency basic information, as well as possible users from your agency. And on the profile, the forms usually don't change year to year, but to view the individual forms, you will go to related actions, and I will go through the two most used profile actions here. So the e-file library stores communication logs, documentation, and other correspondences between agencies and NTD. You can filter through these items based on a particular report year that you're looking for, or the type of correspondence you're looking for, possible waiver request, or you can filter on the status of the correspondence. That is to say, an item that is accepted, rejected, or currently under review. The form library is found in the profile, and this is where you can see data from previous years that has been submitted. You will go to the drop-down to select the package, then the link in the blue for whichever form that you want to view, and this will be downloadable in an HTML format. In addition to viewing forms, under the Related Actions tab of the profile, you'll be able to print previous year's report packages in full rather than form by form. Other actions you can complete are viewing and editing the profile forms, the P10 basic information, the P20 mode form, or the P30 user form for users of your agency. If you choose to print your annual package, you will be taken to a new page where you will click on the refresh button until the link comes up for you to download the file. As a red arrow should be on the refresh button, but you get the gist there. This slide will show you where the downloadable file will appear after it populates after clicking the refresh button, and it'll be right under the print annual forms header of the page. As you can see there, it says view printable version of the report. Circle back to logging into the system. You will first need to be a user. To add users, each agency must have a user manager. And those designation letters can be sent as requested to be filled out and forwarded back for processing. User managers may fill NTD roles as well. In this case, editors can also be a user manager for your agency. On this page, you will see all the permissions that each NTD user role entails. The CEO and CEO delegates can create a report request, such as for a waiver or extension. They can also create, review, and edit all forms and issues, and they can both submit the annual report package. The NTD contact can view and edit all forms and issues, as well as submit the annual report package after the first submission. Editors can only view and edit all forms and issues, and viewers may only view the current data and any issues. If you get to your reporting system and do not remember your password, you can click the Forgot Password button on the main screen. You will receive an automated email generated from the system that will allow you to create a new password. Remember, the link will expire in 15 minutes. Additionally, make sure to check your spam or junk folder if you did not see the email in your inbox initially. Sometimes it does end up there. After 60 days of inactivity, user accounts will lock and the system will send an automated email alerting the user their account has been locked. Prior to your account locking, you should receive lockout warning emails 15, 10, and 5 days before the system does so. If this happens, there are two different ways to complete this. You can either unlock your account if you have set up security questions, which we will go over in the next slide, or you can submit an unlock request. If you submit an unlock request, the request will go to the user manager or user managers on the profile. If you're a user manager, it will go to the other user manager if you have one, or the NTD team to further process. As mentioned, if you have set up your security questions beforehand, you will be able to unlock yourself. To set up your questions, go to the top right-hand corner of the screen after logging in and select the avatar, and then select your profile. Select related actions and then manage security questions. From there, you will be able to follow the steps to set them up. Once you're logged in and ready to go, the next step will be to actually complete the report. So now we're going to cover the first step related to the NTD annual report, which starts with the completion of the report year kickoff. The kickoff process officially launches the upcoming report year for your agency. So as soon as your fiscal year ends, the CEO and NTD contact will receive a task to complete the kickoff. Once completed, your report package forms will generate to then work on. From the news feed, you'll select the task tab and you should see the report year kickoff task available to you. So to begin, you will open the task, you'll accept the task, and then you'll click the proceed button. The first step here is to update the agency users. Ensure that all contact information is accurate and up to date, and that appropriate users are designated to the correct roles. Again, please note that only user managers can add new users or deactivate existing users. The next step is to add or edit modes to your agency. So if you reported last year, the modes will pre-populate on the screen. So if nothing has changed for your agency, you'll just click the blue continue button. But if you're a new agency or simply need to add a new mode, you'll hit the add mode button. And note, when you're adding a new mode and you're inserting the dates for that, you should not enter an end date. In any mode that's still operating, keep that end date blank. The next step is the management of the transit asset management sponsor. If you selected a sponsor last year in report year 2018, you will just select the blue continue button. You will also select the continue button if you have the same sponsor or if you're your own sponsor. If you need to remove the sponsor or select a new one, discuss this with your analyst further and we'll set that up correctly in the system. If you did not select a sponsor last year, you'll see the screen above. You can either select a sponsor this year or select continue if you're your own sponsor. The second to last step in the kickoff is confirming your reporter type. Since all NTD tribes are small system reporters, you'll want to make sure the answer is no when you select the answer to the question, do you want to change your reporter type? If you believe you need to change this, please contact your analyst. The last step is similar to the previous step where you're asked to confirm your reporter type for next report year. Please ensure that no is selected again and then submit the kickoff. After completing the kickoff process, reporting forms may take up to 3 minutes to generate. Click OK to end the task. Next, I'm going to hand this off to Courtney to further discuss completing the annual report.
Okay, thank you, Eric. So now we will discuss how to complete the 2019 annual NTD report. To access your annual report package, select Records, then NTD Report Packages, open the FY19 report package, and click on the Annual Forms button in the top right-hand corner of the page. Click on any form to begin. You may complete the report in any order, but it may be beneficial to work from the top down as some forms populate data based on other forms data, such as the FFA10 form pulling in data that is saved the RR20. These are the annual report forms that all tribes who operate transit service must complete. Some of these forms must only be completed once, while some forms must be completed for each mode and type of service. We will now overview each of these report forms. The B10 identification form is where agencies report their basic information. First, your organization type should reflect option 13, which is tribe. You should also answer whether your agency receives FTA Section 5307 Urbanized Area Formula Program funds. This funding type typically does not apply to tribes. If you answer yes to this question, please contact your analyst for further discussion. Next, review your agency's demographic information. The primary UZA will auto-populate and cannot be updated. This item reflects the primary state in which your agency operates service. The secondary USOA or non-USOA does not apply to most tribes, so contact your analyst if you think you may need to report a secondary state on your B10 form. Next, report your tribal area based on U.S. Census Bureau data. You will report the areas you operate in according to NTD's SERV rules. If you begin typing in your tribal area, the available options should pre-populate. If you do not see your tribal area listed, please contact your analyst. Modes filing a separate NTD report does not typically apply to most tribes. If your agency pays the full cost for a separate service that another NTD agency will report, contact your analyst to discuss the details of this agreement. Select Save or Save and Validate when you are finished with the B10 form. The B30 form captures information for purchased transportation contracts with other agencies. It identifies the logistical specifics of the contract as well as some basic financial information regarding the contract details. Please note that the NTD has strict requirements for what constitutes purchased transportation services. The NTD requires agencies that buy transit service to report this service as purchased transportation as long as it meets the following criteria. The buyer of service must pay 100% of the full cost to provide the service. The service must operate in the name of the buyer, meaning the service must be branded as the entity paying for the service. And finally, the seller must operate and manage the service on the buyer's behalf. If you need to add a new B30 form for this report year, begin by selecting whether the agreement is with another agency who reports to the NTD or if the agreement is with a private company, and then select Continue. If you indicate that the other entity is an NTD reporter, you must select the contracted agency from a list generated by the current NTD database. Next, indicate your contractual position, which reflects whether your agency is the entity buying the service or whether your agency is the seller or operator of service. Report the type of contract next, which can be one of three options. Select whether the contract was competitively bid, negotiated, or subsidized. This should reflect the first time the contract was originally awarded, even if it has been renewed. For example, if a contract was originally competitively bid, but later negotiated in subsequent years, you should report that contract as competitively bid. Next, report the primary feature of the contract. This represents how the buyer compensates the seller. Does the buyer pay the seller a negotiated fixed rate per unit of service, or does the buyer reimburse the seller's net operating expenses based on an approved budget? Next, indicate whether the data associated with the contracted service will be reported in your NTD report or if the data will be captured in another NTD report. Next, indicate whether the seller of service keeps the fare revenues generated by the service or if the seller returns the fares collected back to the buyer. On the right side of the form, check the applicable boxes for any public assets provided in this agreement. Indicate what assets the buyer provides to the seller, such as vehicles or maintenance facilities, if any. The next section of the B30 form represents key financial and operation statistics for the contracted service. Begin by selecting the Add New / Type of Service option beneath this section. Next, select the appropriate mode or modes for the contracted service. Select Edit to begin entering the data for this agreement. Complete the data as applicable. You will report data such as the number of vehicles operated in this service, the fare revenues generated by the service, and the number of months operated. If you have any questions about these data elements, refer to the NTD policy manual or contact your validation analyst. Once you have completed this form, select Save and Validate. If this relationship has been terminated, you can remove the corresponding B30 form by selecting Remove Contractual Relationship on the form. Some tribes have subsidy agreements with local transit providers in which the tribe contributes an annual subsidy amount for the provider to extend its service into the tribal area. The tribe does not pay the full cost of the provider's service and does not operate or purchase other modes of service. These types of agreements do not qualify as full cost contracts, but should be captured on the B30 form under the subsidy contract type, and agencies with the tribal subsidy report format will have to complete reduced reports for the NTD. For example, a tribe pays a local transit provider a fixed amount per year for the provider to extend a bus route to serve the tribe. The provider adds several stops along the route to service the tribal area. The buses are branded as the provider and managed by the provider. In this instance, the tribe is not covering the full cost of the service and would report the financial contribution under the subsidy contract type. In another instance, a tribe contracts with a private company to operate demand response services. The tribe covers the full cost of operating the service, brands all the vehicles as tribal transit, and manages all scheduling and dispatch operations. This agreement meets the criteria for a full cost contract, and the tribe would need to report the service as a purchased transportation agreement. The A10 form represents your agency's passenger stations and maintenance facilities. For fixed route modes, such as motor bus, the passenger stations section will appear at the top of the form. Report the number of ADA accessible or ADA non-accessible stations. Report the total number of escalators and elevators in each station. Please note that passenger stations for NTD reporting purposes must be significant structures in a separate right-of-way and usually include ticketing, restrooms, concessions, or information desks. Bus stops or bus shelters do not qualify as true passenger stations. Report your agency's maintenance facilities, both in quantity as well as ownership type, facility type, and capacity. If a facility is used by more than one mode of service, if a facility is used by more than one mode, report a prorated share of that facility based on the number of vehicles it services. You should not report maintenance facilities that are owned by third-party entities, such as a Jiffy Lube or a local body shop. If an agency has one facility that services more than one mode, the agency must allocate the shared facility between modes. The allocation variable would be the number of vehicles serviced by the garage. For example, if one garage services 4 vehicles for the bus mode and 6 vehicles for the demand response mode, the MB or bus A10 form would reflect 0.4 of a facility because 4 of their 10 total vehicles are used for the MB mode. The DR or demand response A10 form would reflect 0.6 of a facility because 6 of the 10 vehicles are used for the demand response mode. If you prorate a maintenance facility, please ensure the sum of the values equal a whole number. The A15 form reflects your agency's facilities used for public transportation. This includes administrative and maintenance facilities for which your agency has capital replacement responsibility, as well as passenger or parking facilities that are used in your agency's revenue service regardless of capital responsibility. Some common types of facilities are administrative buildings, combined administrative and maintenance facilities, and maintenance facilities. If you reported facilities in the previous report year, these entries will populate in this year's report. To report new facilities on the A15, select the Add Facility link. You may add multiple facilities at once if you would like. Each facility entry has 3 sections: facility information, condition assessment, and address. We will now review each section. In the facility information section, enter the following information: the name of the facility, the primary mode it services, as well as any secondary modes it may service, whether the facility services a private mode, the type of facility you are reporting, the year the facility was built or reconstructed as new, the square footage of the facility, and if the facility allows for parking, the system will allow you to enter how many parking spaces the facility has. You must also report the percentage of capital replacement responsibility your agency has toward the facility, and if there are any notes you would like to add. If you select certain facility types, such as combined administrative and maintenance facility, please enter a note explaining the functionality of the facility. After entering all applicable data, click on Continue. In the next section of the A15, report the condition assessment for the facility. Agencies must report a condition assessment for having capital replacement responsibility for a facility, but not if the facility is under construction. Condition assessments are reported as an integer value of 1 to 5. Report the estimated date of the condition assessment, which could be when it was built or when it was reassessed. The name of the facility will carry over from the first section, and the ID will be assigned once you save. The last section is the address section. Again, the facility name will carry over from the first section. Enter the full address of the facility, and once you are finished with all the sections, click on Continue. Upon clicking Continue from the last section, you will be sent back to the summary page of the A15. From here, you can save and validate, or edit your facility by clicking on the name of the facility, or checking off the radio button next to it and clicking on Edit Selected. The A30 form reflects your agency's revenue vehicle inventory. Your fleet information will pre-populate based on last year's report. The A30 form should reflect a snapshot of your agency's vehicle inventory as of the last day of your fiscal year period. If you need to add new fleets or edit any existing fleets, select the appropriate option. To add a new vehicle fleet, select Add Fleet and complete the data fields accordingly. If you have 2 or more vehicles that are identical across all characteristics, group the vehicles into fleets. The selection for automated or autonomous vehicles is new for report year 2019. Fleet information can include vehicle length, seating capacity, year manufactured, and useful life benchmark. After you enter the fleet's information, select Save and Validate on the A30 form. Transit agencies must report the number of active vehicles in the fleet as of the last day of their fiscal year period. Active vehicles are vehicles that regularly provide revenue service or vehicles that are available to provide revenue service, such as spares, backups, and vehicles that are temporarily out of service for routine maintenance. Inactive vehicles, however, cannot readily provide revenue service, as these include vehicles that have been taken out of service if they are awaiting sale, vehicles that are in storage or are part of an FTA emergency contingency plan, or vehicles that are out for long-term major repairs. A fleet should be marked as retired when the fleet has been sold or disposed of. When a fleet has been sold or disposed of, you should change active vehicles to 0, and the system will prompt a question that asks if the fleet is retired. Select yes if the fleet is retired, or select no if the fleet is simply inactive but still owned by the agency. You should not delete retired fleets from the report. You should only delete a fleet if it is mistakenly included in the A30 form, or if you are removing a duplicate fleet after using the Add Existing Fleet function. The A35 form reflects your agency's service vehicle inventory. You should only report the service vehicles for which your agency has capital replacement responsibility. Examples of service vehicles include cars used for administrative staff, transit police cars, tow trucks, or service trucks. Service vehicles must be self-propelled and roadworthy, so agencies should not report small forklifts, golf carts, or any other vehicle that does not meet these criteria. The A35 form should not include revenue vehicles. You are required only to complete one A35 form for your agency. This form is not mode specific. Like the other asset forms, if you reported service vehicles in previous report years, the data will populate in this year's report. If you need to add a new service vehicle fleet, select Add Fleet and complete the information accordingly. Service vehicle types include 3 selections. Automobiles, which include sedans and all other vehicles up to and including station wagons. Trucks and other rubber-tired vehicles include vehicles larger than station wagons, including vans, minivans, pickup trucks, and SUVs. And steel wheel vehicles typically service rail modes and are a rare selection for tribes. On the next page of the Add Fleet function, report the estimated cost to replace the fleet, which should represent a cumulative cost for the fleet. Report the year that corresponds to the dollar value you reported as the estimated cost. You must also report the transit agency capital responsibility for each service vehicle fleet. Once you have completed this, select Continue, followed by Save and Validate. The A90 form is where agencies report the portion of their public transit assets that the agency expects to have met or exceeded the useful life benchmark. The form compares the asset's current year targets to actual data that is pulled from the current year's asset forms. For vehicles, the system evaluates the useful life benchmarks reported on the A30 and A35 forms. For facilities, the system evaluates the condition assessments reported on the A15 form. Some agencies report their asset targets directly to the NTD, while others are participants of group plan sponsors. Group plan sponsors report one A90 form on behalf of their managed and independent participants. This form will represent the plan for the whole group. The rolling stock section refers to your revenue vehicles and corresponds to the A30 form. The vehicle types in the A90 form are populated from your agency's active modes. Report a target for all of the vehicle types that apply to your agency and select NA for all vehicle types that do not. The equipment section refers to your service vehicles and corresponds to the A35 form. The vehicle types are consistent with the 3 vehicle types available on the A35 form, which are automobiles, trucks, and other rubber-tired vehicles, and steel wheel vehicles. Again, either report a target or select NA. The facilities section refers to your agency's facilities and corresponds to the A15 form. Report the percentage of your facilities that have a condition assessment below 3 based on the FTA term scale. Underneath these sections on the A90 form, upload your agency's TAM Plan Narrative Report. This is a required field for 2019. The narrative report outlines your performance targets and your agency's progress towards those targets and may include any changes to your transit system. There is more information regarding narrative reports on the NTD program website, or if you have questions about this requirement, please contact your assigned validation analyst. The RR20 form reflects your agency's financial data, service data, and service safety data. To begin reporting your financial data, first enter your total annual operating expenses at the top of the form. If you operate more than one mode or type of service, you must report operating expenses that are specific to each mode. In the remaining data elements on the RR20 form, you would report the individual sources of funds that contributed to your operating assistance. The system tallies your funding sources as you enter them, so that when you are finished, the sum of your funding sources must match the value you entered as your annual total. Note that your agency's fare revenue expenses are counted as a contributing funding source towards the total. These funds are not netted out. When reporting operating expenses for 2 or more modes, you are required to capture and report operating expenses from each mode separately rather than allocating your total operating expenses. To do this, you must first determine which expenses are direct expenses that are easily traced to one particular mode. After you have separated the direct costs, determine which expenses are indirect or shared costs and which are not easily traceable to one mode. Once you have identified the shared costs, you may allocate them based on another data point, such as vehicle revenue miles, unlinked passenger trips, vehicle revenue hours, or number of employees. Report your agency's expenses from fare revenues. Fare revenues represent all income received and expended directly from passengers, including any donations that are made on board the vehicle. Donation-based fares should be reported as fare revenues. Passenger-paid fares represent fares that passengers pay on their own behalf, including adult fares, senior citizen fares, student fares, child fares, or fares for individuals with disabilities. Organization-paid fares are paid for by an organization rather than by a passenger. A common example of this is a university that pays a local transit agency to allow students and staff to ride fare-free. Agencies that operate 2 or more modes are required to capture and report fares expended from each mode separately rather than allocating the total fare revenues. An exception to this requirement may apply if your agency's fare policy involves a fixed fare for the initial segment of a multi-mode trip and the transfer charge is not equal to the fare charged for a single ride trip on the next mode, or if a large portion of passengers use prepaid fare media that is accepted on all modes. In the event your agency's fare policy falls within these categories, please explain the circumstances during validation. Other directly generated funds are funds other than fare revenues that your agency generates. These funds include advertising revenue, concession revenues, fundraisers, park and ride revenues, interest on investments, non-full cost contracts, donations, and insurance recoveries. If you report funds to this data element, please note that you will be required to provide a description. Revenues accrued through a purchased transportation agreement is a rare selection for rural agencies. You would report funds to this category if your agency is the seller of service in a qualifying purchased transportation agreement or full cost contract. Your validation analyst will ask for clarification during validation in the event you report funds to this field. The non-federal funds section is where you report your agency's expenses from local funds, state funds, and other funds. Local funds include funds from tax levies, general funds, specified contributions, or funds from local entities. State funds include funds from state programs that support public transit, including the state portion of Medicaid funds. If you report any funds to other funds, you will be required to provide a description in case the funds should be reported to another category. Next, report your agency's federal funding sources. Select all applicable checkboxes that correspond to the federal programs from which your agency expended funds during the fiscal year. When you select a checkbox, the subcategories of that program will populate in the form so you can report the expenses. If you report funds to an other category, such as other FTA funds or other federal funds, you must provide a text description of those funds. Here are some common examples of other funding types under the federal funds section. Other FTA funds are funds from a federal transit administration program that is not already listed on the RR20, such as the FTA Clean Fuels Program. Other federal funds are funds from another federal program that is not already listed, such as Housing and Urban Development, Department of Health and Human Services, and Medicaid. Other US DOT funds are federal funds specifically from the Department of Transportation, which can include Federal Highway Administration funds. The service data section is where you report your agency's operating statistics for the year. If you operate more than one mode, report your agency's service by each mode and type of service. As a reminder, revenue service is when a vehicle is providing public transportation and is available to carry passengers. Please also note that the unlinked passenger trip value should represent the total annual unlinked passenger trips, including both your regular as well as sponsored trips. The safety data section is where you report any reportable safety incidents, as well as the number of fatalities or injuries that occurred as a result of those incidents, if applicable. A safety event is automatically reportable if it results in any of the following: a fatality, an injury, cumulative property damage totaling more than $25,000, a towaway of any vehicle, including a transit vehicle or private vehicle, or an evacuation for life safety reasons. Please note that fatalities are reported when death occurs within 30 days of the event, and injuries are reported when a passenger or passengers are immediately transported away from the scene for medical attention. If your agency does not have any safety data to report, ensure you enter zeros in these fields rather than leaving them blank. Please note that injuries or fatalities must result from a transit-related event such as a collision to be reportable. So for example, if a passenger suffers a stroke while riding a transit bus, but there are no transit-related events that take place, if that passenger passed away, this would not be reported as a fatality because it did not result from specifically a transit event. If your agency reports under the tribal subsidy report format, meaning your agency subsidizes a local provider's service and does not directly operate or purchase other service, you would have a reduced RR20 form. You will not report service statistics for this service, as this data would be captured in the provider's report. You should only report the funds that your agency contributes to the provider for service. Do not report any of the provider's expenses that they cover themselves. The FFA 10 form allows an agency to allocate vehicle revenue miles between multiple rural areas or urbanized areas as necessary. Most tribes operate in only one rural area, so if this is the case for your agency, you would allocate 100% of your data to this area. If you operate in 2 rural areas, you will need to report the corresponding service statistics in each state. Divide service and operating expense totals into subtotals for each area served. Reporting service data by the correct area is critical as this data impacts the amount of funding FTA apportions to each area. On the FFA 10 form, select which reporting method you will use to allocate your data. If you only operate in one area, select the option for vehicle revenue miles. If you operate in 2 or more areas, you have the option to select vehicle revenue miles, actual data, or other. These methods reflect how your agency will break up and allocate data to each area. If you only operate in one USOA or non-USOA, the data in the FFA 10 form should always match the data from other forms column, which refers to the data in the RR20. If your agency operates in multiple areas, the sum of your data allocation should always total 100% between all USOAs. If you enter data on the RR20 form and then complete the FFA 10 form to match that data, but then go back into the RR20 form and revise the data, please note that you will also be required to revise the data in the FFA 10 form accordingly. The D10 form is the CEO certification form. This is where your agency's CEO attests to the accuracy of the data reflected in the report. Review the 2 questions regarding overall accuracy and conformance to NTD manuals and select yes if the data meets the requirements. Select Save and Validate or proceed on to the Unlinked Passenger Trip Data section. Next, select the method your agency used to collect unlinked passenger trip data from the drop-down menu. Most tribes will select option A, as this option represents a 100% count of ridership data rather than using a sampling method as many large urban agencies do. Select Save and Validate the form when the form is complete. When completing the NTD report, agencies may encounter a number of reporting challenges. These challenges can include understanding NTD policies, completing data entry in the report forms, submitting an incomplete report, or understanding the validation issues that fire for your data. We will discuss some common reporting challenges and how to resolve them. NTD validates the data that agencies submit as part of their annual reports. This can include time series checks against previous year's data, logic checks between data items on different report forms, and verifying data that is reported for the first time in a particular report year, such as new modes and types of service or new funding sources. NTD also completes range checks for typical values found among transit agencies with similar operating characteristics. When NTD validation analysts have questions about the data you have submitted, you may revise the data to reflect accurate information if the data requires a correction, or you may provide a detailed explanation for the data if the data are correct as reported. Tribes who report to the NTD indicate the tribal areas served by their transit service every year. This data point must be updated on the form for each report year in case there are any changes to service. The Tier 3 of tribal apportionment is based on the data entered in the tribal areas field. Analysts review the U.S. Census data for tribal areas that are near the tribes and may ask for confirmation or documentation as applicable. Common issues with this data point can include erroneously excluding areas that are served or erroneously adding areas that are not served. Agencies may also mistakenly add areas whose names are similar to their own area. As a reminder, if an agency operates more than one mode and type of service, the agency should determine which costs are direct costs that are attributable to a particular mode and type of service, and which expenses are shared costs that cannot be easily traced to one mode. The agency should then trace or allocate shared costs to each mode, type of service, and function. Common allocation variables include, but are not limited to, vehicle hours and miles, vehicles operated in annual maximum service, number of employees, direct expenses, and ridership. Agencies must report all funds used to support their public transit operations, not just their federal sources. The NTD reporting platform accounts for year-to-year funding changes in an agency's report. This checks whether funding sources have been reported consistently such as local funds, state funds, other directly generated funds, and 5311 funds. Certain data element fields have been consolidated between 2017 and 2018, such as donations being moved to other directly generated funds and contract revenues being moved to either other directly generated funds or revenues accrued through a PT agreement, depending on the nature of the contract. A key component to understanding NTD reporting is understanding what constitutes revenue service. Revenue statistics on the NTD report must always exclude deadhead. Deadhead can be defined as when transit vehicles are operating closed door and do not carry passengers. Deadhead includes the miles and hours spent leaving or returning to the garage or yard facility to or from the starting or ending point of revenue service. This also includes miles and hours spent changing routes during the day or generally whenever the vehicle does not have the duty to carry passengers. Vehicle revenue miles is an apportionment formula factor for the 5311 program, so this data is validated closely. Vehicles operated in annual maximum service, or VOMS, represents the number of revenue vehicles an agency operates to meet the annual maximum service requirement. It excludes atypical days or one-time special events for non-demand response modes. VOMS should be a snapshot of the peak day, not an all-day count. Capital expenses are the expenses that are related to purchasing a capital asset or making an improvement to a capital asset that materially increases its value or useful life. Capital expenses include the acquisition cost of the capital asset, including the cost of delivery, as well as installation or any modifications made to the asset. Agencies might report just the new vehicle or just the capital expenditure, but not both during the report year. This would be brought up in validation by your analyst for more information. If an agency operates more than one mode, the agency would need to report a capital expense to one mode based on predominant use rather than allocating the cost of the asset between two modes. When agencies update their revenue vehicle inventory year over year, they must ensure the data meets NTD requirements. All transit agencies reporting service data must provide information on their revenue vehicles by mode and type of service. This includes inventorying all vehicles they use to provide public transportation that have not been sold or disposed of at the end of the fiscal year period. This includes vehicles currently in operation, vehicles awaiting sale or disposal, vehicles out for long-term repair, vehicles in storage, or vehicles retained as part of an FTA-approved emergency contingency plan. Vehicles must be reported on the first fiscal year in which they become available for revenue service. Some common issues on the A30 form include agencies reporting the model year of a vehicle rather than the manufacturer year, agencies deleting a fleet rather than retiring it, or not updating vehicle fleets year to year with retired vehicles. Transit agencies must report the next fiscal year performance targets to the NTD for assets for which they have capital replacement responsibility. For rolling stock, this represents the percent of revenue vehicles that have met or exceeded their useful life benchmark. For equipment, this represents the percent of service vehicles that have met or exceeded their useful life benchmark. And for facilities, this represents the percent of facilities with a condition assessment expected to rate below a 3 on the FTA term scale. To submit the annual report, open your report package summary page and select related actions. Note that only the user with CEO or CEO delegate privileges may submit the original submission of the report. The NTD contact may submit all subsequent revisions. Users with editor or viewer roles do not have submission privileges. On the related actions page, select Submit Annual Report Package. If your report is complete and no outstanding issues remain, you will be able to confirm the report package submission and select Continue. You will receive an automated notification from the system stating that the action has been completed successfully. You may review your report package at any time before the report is officially closed by FTA, and you can confirm your report package status if the package is listed as in review rather than working data on the report package summary page. Okay, we will now turn back to Eric, who will review the validation and closeout processes for the annual report.
As Courtney mentioned, we're going to be finishing this up with the validation and closing process. Your assigned NTD analyst will review the entire report for accuracy and consistency. It will compare the data submitted this year to the data submitted last year for any significant changes, as well as to ensure that all data was reported to the correct fields. If there is a data change from year to year, please avoid stating generalized responses, much like data is correct. You should be able to explain the change, which will in turn reduce the amount of back and forth between yourself and the analyst. Here's an example of a validation check that would fire. If a bus was reported with a length of 35 feet last year, then the agency revised the length to 25 feet this year, a validation check would trigger, as vehicles typically do not change length year to year. So with that, there are some possibilities on how to resolve the issue. One is that you can provide a response to the discrepancy, much like the data was reported incorrectly last year, and it was corrected this year to the actual length. Or you can revise back to the original length that was reported last year. If you're unaware of the issue that's being asked, feel free to always ask and discuss with your analyst. Once the analyst has gone through the report, they will send it back to your agency to resolve the open issues. Each time this happens, the due date timetable is shortened, as there should be fewer issues each time. If you failed to correct any issues stated in the prior year closeout letter, they may be marked as questionable in the current validation year. When you're on your report package, you'll see two columns indicating open issues and total issues. The total issues are the overall amount of issues the form has, and the open issues are the amount of issues that still need to be addressed. For example, your RR20 form could have a total of 10 issues, but since you have already addressed 4 of them, you would only then have 6 open issues to still address. Next, we're going to discuss saving versus saving and validating a report form. So when you're working on a form, you're able to either save or save and validate the form when you're done working on it. If you fill out a form partially, you should just save the form, and if you are completely done with the form, you should then save and validate it. When you're done with the form and have saved and validated this, validation will be applied and the form will turn green rather than red how it was previously. Please note that if you save and validate and then make changes to the form, you'll need to save and validate again to keep it as green. Next, we will go through how to navigate to view the issues on a report form. One way is to open up that particular form and go to the bottom and select the View Issues button as shown here. This will prompt you to a new page with the issue specific to the form that you're on. The other way is from your report package summary page and going to the top right and selecting the View Issues button. This will allow you to view all the issues on the report rather than the one specific to the form that you're on. Once you get to the View Issues page, you will then need to address each open issue listed there. To do so, you will click anywhere on the issue row to highlight, which will then bring up additional information at the bottom of the screen. You will scroll down to see the additional information along with the comment box, which is where you will place your validation response to the specific issue being addressed. Once you have placed a comment, you will then save. Issues typically relate to incomplete reports, which can mean either the data does not conform with NTD definitions, accounting principles, or it can mean that the agency did not adequately respond to validation issues raised by the analyst. All identified issues must be fully addressed in order for the issue to be resolved. If either of these occur, the NTD will cite them in the closeout letter. The best way to resolve validation issues is to provide solid and detailed explanations that give your analyst a clear picture of the service. Explain why the data changed from year to year or what service changes took place to cause a significant shift in the data reported. If you find that last year's data was wrong, provide an explanation as to what it should have been why it was reported incorrectly, and why this year's data is correct. Again, here's the contact information for our team as well as the help desk, which is open Monday through Friday, 8 a.m. to 7 p.m. Eastern Time. Thank you everyone for listening, and now we will open up for questions.
Thank you both. If anyone has any questions about this presentation, feel free to type it in the Q&A box. You could also type it in the chat box. I mean, we'll read it if it's there. So we'll just wait a few minutes. There'll be some dead air, and we'll see if anybody types any questions. All right, going once, going twice. Okay, let's wrap this up. Thank you everyone for participating this afternoon. A big thank you to Courtney and Eric for your presentation. As a reminder, everyone will be receiving an invitation to fill out an evaluation for this webinar. Please take a few minutes and fill that out. NTI really appreciates any feedback you could give us. Thank you again, everyone, and have a great Thursday.